These are huge increases from where the prices were before the pandemic started.
So when you start thinking about kind of what people can do with this, right? If inflation's high, how do you think about where they can actually put capital in order to protect it? Is it something where we all know that you're into gold? Is gold the only answer, or are there other types of assets that you think are worth folks looking into or kind of doing research on?
Well, what inflation does is it wipes out the value of paper assets. So if you have cash in the bank, inflation is bad. If you own a bond, that's even worse, because people are now going to pay you your money that you loaned them, but they're going to pay it back in the future. Well, if you have inflation, money in the future is worth even less than money in the present. So the longer the duration of that bond, the more of your purchasing power you're going to lose by the time you get your money back. So you don't want to own bonds. You don't want to have cash value in things like annuities. Let's say you have an annuity and it's going to pay you a fixed return. Well, that return is going to erode away in purchasing power as a result of inflation. So you don't want a fixed annuity. You don't want cash value in an insurance policy. What inflation does is it transfers purchasing power from creditors to debtors. So you want to have debt that will get wiped out, but you don't want to just go out and borrow a bunch of money and buy consumer goods, because you still have that debt. The consumer goods are gone. You want to buy real assets that generate income that can service the debt in the short run, and that will ultimately retire the debt in the long run as the debt is destroyed in value relative to the assets that you own. So you want to own real stuff in inflation. You want to own assets. And so what I own is I own a lot of stocks, a lot of common stocks, looking around the world at what you can own, whether it's real estate or stocks or collectibles. I think that value-oriented stocks, dividend-paying stocks in countries like where I am here in Switzerland, I think there's still a lot of value in some of the Swiss stock market and other countries that I invest in. I think that relative to other assets, and I'm looking at property while I'm here, and I think residential real estate is very expensive compared to what I can buy publicly listed companies for and the dividends that I'm able to get. So I think that being an equity owner of a business in a country that is not nearly as screwed up as the United States, has much sounder underlying economic fundamentals, where I can see real investment value in the stocks, meaning the PEs are not too high, the dividend yields are not too low, well-managed companies, been around for a long time. So I like owning real stuff. I don't want to buy the bonds of these companies because inflation will destroy their value. I want to be the equity owners, because the stockholders benefit when the bonds are destroyed, because that transfers purchasing power from the creditors to the equity investors. But I also want to own gold as a commodity, because what you're doing with inflation is you want to preserve your purchasing power. So the price of everything that I'm going to want to buy in the future is going to go up. Well, the price of gold is also going to go up, because there are people who need to buy gold. Jewelers need to buy gold because they got to make jewelry. Computer chip manufacturers need to buy gold because they need to conduct electricity in their chips. The dental industry, the aerodynamics. You got a space race going on right now. Well, they need gold to get up there. There's a lot of industries where they're going to be buying gold in the future, and it's going to be more expensive, just like everything else. So I don't want to buy a bunch of oil because I got no place to put it. I don't want to buy a bunch of wheat because where we got to put that, it may not stay. Eventually, it's going to rot, and the shelf life of a lot of the things that I might want to buy in 5 or 10 years. I can't buy it now, but I can buy the gold now because I can get a lot of value in a small place. And in 5 or 10 years, when I need to buy that stuff, I can use my gold because I could trade my gold for it.
All right, but hold on.
Real commodity.
Hold on, though. So I got a couple of questions from a portfolio standpoint. One, what are the biggest stocks that you own, like in terms of allocation in the portfolio? What are like the most popular or the largest allocation you have to individual stocks? And then two, how do you think about over the last 12 months, gold's essentially flat, right? It's kind of plus or minus maybe 50 basis points on any given day over the last few weeks. Is that a positive for gold or a negative for gold, given that they printed trillions of dollars? So what's the largest allocation to individual stocks? And then how do you think about gold's performance in light of all the printing?
Well, as I said, most of my personal portfolio is in individual common stocks. My largest allocation personally to a sector is mining, precious metals mining. And that's because of how bullish I am on gold. But I also have a big weighting to energy and other natural resources, basic materials. We own a lot of real estate trusts. Some of those stocks really got beaten up after the pandemic. There's a lot of value there. We own a lot of telecom. There's a lot of value in those sectors. I own a lot of pharmaceuticals, a lot of different sectors and companies. I have managed accounts where I build portfolios for people at Europe Pacific Asset Management. And, we have a professionally managed portfolio of individual foreign equities. And you probably have heard that everybody has been chasing momentum and indexing for a decade or so. It's the value stocks, the dividend yielding stocks that have kind of lagged during this bubble. So there is investment value there, not in any one stock. I mean, we like to have a diversified portfolio of companies that work together, but as far as gold is concerned, look, gold in a short time span, and, for some investors who day trade, a year may seem like an eternity, but in terms of gold, a year is not very long. And, so in a shorter run like that, gold is going to simply reflect what people believe is going to happen to the dollar, to inflation, to interest rates at a particular point in time. And I think the reason that we haven't seen an even bigger move up in the price of gold, and you have to remember, 20 years ago when we started this decade, gold was under $300 an ounce, and now it's $1,800. I mean, gold has actually beaten the S&P 500 so far during this millennia. But the reason that we're not at 3,000 or 4,000 is because the vast majority of investors do not appreciate what's happening. They see inflation picking up. They are underestimating how bad it's going to be. And at the moment, they believe the Fed is going to be able to prevent the inflation from becoming too big a problem. Even if it doesn't solve itself by being transitory, the Fed will raise interest rates, it'll taper its assets purchases, and that'll be enough. And the Fed's going to save us from, a repeat of the 1970s or something worse. They're completely wrong. Inflation is going to be much worse than anybody thinks, in the mainstream. And the Fed's going to do nothing about it. Even though inflation is going to be worse than everybody thinks, not only is the Fed not going to fight it, the Fed is going to fuel the fire. The Fed is actually going to get more aggressive in its monetary easing. It's going to expand its QE program, not taper it. It's not raising interest rates, despite the fact that inflation is going up. And when investors finally wrap their arms around that reality, they're going to bid the price of gold through the roof.